So my my take on this is that Bitcoin uh, basically came as a in response to a large money supply, in the sense that paper currency, it increased significantly the circulation of paper currency, and there was a feeling that with so much of paper being in circulation, paper would lose its value. Um, and as the situation unfolded, dollar, instead of losing a sizable value, I think it continued to strengthen. I think thanks to probably the European crisis and any other reserve currency being in place. And then crypto came as in case the paper currency loses value, and I think crypto can be an alternate. It can't be a currency because I think there are several ifs and buts besides the regulation and international acceptance of it being a legal tender, which should be part of the transactions. Um, I think uh, some senior member of the U.S. government and Treasury, they had made public statements wherein say that they have also invested their money in cryptos. And I think across the globe, portfolio managers are also saying that put small part of the money in crypto. Some very distinguished investors like Warren Buffett, etc., they had a view is that it's a junk. So, uh, in a considered opinion, while this came in response to sizable paper supply, but whether it actually takes center stage depends on how it gets regulated and how it gets accepted globally as a medium of exchange. Because I think there are no half, 1/4, 1/10, etc., and value is very very large. So there are, I mean, there's lots of practical issues in terms of how it's going to get, but across. And one more concern was that it could also be used for money laundering, for example. So there are a number of issues which need to really get addressed before a crypto or while the underlying technology is very very sound and an innovation in that respect, but global acceptance is still some time away till the time the leaders, global leaders and the sane voices, they agree on to the true worth and value and how, if at all, the supply is going to get regulated. So I think it's still in the domain of lots of ifs and buts of
it is work in process.
Work in process. Yeah.
Yeah.
Sir, we have seen that we have completely transformed from traditional banking to everything online. Fintech is a buzzword nowadays, and everyone is almost, at least in the metropolitan cities, are aware of it. But there's a term, neo banking, which came a decade ago, but still it is not legalized as such in India. And what is the reason for it? And how do you see the future of neo banking, sir?
Effectively, as I said, that to my knowledge, no licenses are given as yet.
Right, sir.
So between fintech and neobank, if at all any neobank licenses will come, because for a neobank to operate as a bank, it need to have really the asset, the money somewhere from for it to be transacted. So to begin with, either there'll be a deposit accepting ones or there'll be piggybacking on the existing banks. So my sense is that while intermediation part of borrowing, lending, deposits, payments has been taken care about, but new banks, what area they will be successful in digitally servicing the customer is going to be I think beside payment, I don't see very many areas where new bank can be succeed.
So can we expect after a decade, maybe like people are doing actually everything without a physical interface, without actual physical banks?
Oh,
Is it
I
really
think
possible in India?
difficult, possible, but difficult in the sense that
I connect to my interactions with you over last 25 years.
Right.
When ICICI and HDFC came as banks, they were called the new private banks. So what was new about them? They were new private banks. They were the old private banks. Vyasa, others like that, Madura. Secondly, the company you were heading, you were the CEO and the MD of that, Securities Limited. What amount of work they did physically? I think 99.9% of the work was digital.
Okay.
Yes.
And we didn't call it a new bank.
Right.
Because it doesn't have a banking license. If you go to the ICICI Bank today and HDFC Bank today, headquarters also, okay, there will be some customer care center or something like that. And some high ticket items will be negotiated. 95% of work is done digitally. So where is the difference left? That there has to be a new bank. Now, the development banks like our I say because I like it, BRICS New Development Bank. So New Development Bank is a bank like ICICI. Thomas had gone there as a first chief executive also. So I think the term doesn't have much punch in it. It is progressive digitization. And even current public sector banks may be on a particular path. And in the end, they will need it. Yeah, I was talking to even the new branch manager of our branch in year of S3. कि भाई आपका काम हो यहाँ पे क्या है? आप तो सिर्फ एंट्रियां करते हो, बैंकिंग क्या करते हो? So he didn't like it. So I said, you don't do any banking here. If there is a banking, it is at the headquarters. You have no banking. You are a data processing organization. Now we relate it to something. People have now started drumming for AI. Now, what is AI?
Artificial intelligence.
No, essence of it. Essence of it is data analysis.
Yes.
And data telling you something. It was telling earlier also, no? What are all the predictive models for? Really? Predictive models are given the data, likelihood of an event happening. Is it?
Providing the information out of the data.
Hanji?
Providing information out of the data.
Not really even. Providing you that the possibility of this event happening is this,
Yes.
this probability, right? Now it's up to you. Now in this case, now you have another algorithm. We say if the possibility is more than 0.9, say yes. Otherwise, no. So anyway, you are again more proficient in this because there is a bit of enthusiasm now which enters before the time is ripe in India because our success in the normal digital transaction. But let's face it, that is the basics. There is no banking involved in it, actually. What else is involved in it? Financial services? No, data transfer.
Actually, see, banking, plain banking, when I say deposit and payments. Now, I think both in some ways, in my sense, you deposit through the machine, you take out the money from the machine, or you transact through the net or your mobile banking application. So payments are going, seamlessly. Payments are being received in your account, whether earlier it was, NEFT, IMPS, or whatever method you use, okay, or through mobile banking. Now, there is only payments, transaction of payments. The question is, whatever deposits a bank has, truly banking in the sense is that the banking was basically, on one hand, getting the borrowers and the lenders together. Okay. And I think new banks, by what you're saying, will do digitized, function of the same thing. My sense is that it's easier from the bank's perspective, the borrowing aspect, the deposits, okay, which are your liabilities from a bank side. That's the easier part because people deposit. You put a machine in saying people can deposit anywhere. Then the second part, lending, which require assessing of counterparty risk, assessing of okay, you say AI may use CIBIL score, may use a social platform data, other data, etc. Now that data, I think, how are we going to make sure that this data does not really have any noise? Because then so many fakes are also being created.
Exactly.
So your analysis based on that large part of the data which is extracted from so-called other sources, how reliable it is going to assess the counterparty risk, which was done earlier, and how effective it is going to be. It's going to be a matter of really empirical understanding how it really plays out. As far as I see it, I do not really see neobanks immediately becoming a major distributor of being a lender, using neobanks to lend money.
Until we have that
until we have very clear idea that how a counterparty risk goes beyond the conventional assessment methods of meeting the person, getting the balance sheet, or getting the CIBIL score, etc. Despite having a good financial, suppose there is no intent to pay, okay, and not today, maybe 1 year down the line, I have decided that my mindset has changed. Do what you want. I become for example, some important person in the area. I don't want to pay. Go and jump. It becomes very difficult. So what system? So I think finance, in my opinion, at one level will actually largely be driven by, because intents, greed, envy, all these things can't really be pushed into the models in as effective terms as.
Is that the behavioral science?
Especially
Behavioral finance.
So that is going to be one critical aspect of banks entire.
Sir, my question is related with micro financial institutions. They are going to play a very, very important role, particularly in the upliftment of women and deprived section of society. But the problem is that their cost of finance is very high. So how we can reduce the cost of finance?
See, microfinance institutions. Your point is valid that
They
for
charge
the-
from 36% to 50%.
that's right. I think my sense is that in Andhra, where it all started, basically the way the principle works, the operation is through what is known as a SHG, self-help groups. So small section, and I think it just puts a pressure on on the people among the group. Now, as far as charging higher, microfinance institutions were trying to replicate or trying to really replace the so-called money lender who were charging exorbitant rates of interest. Okay. And the poor people, they were virtually drowned in debt for all their life. My sense is that because for microfinance to be viable, two aspects are important. One is that they need to find relatively cheap sources of funding. Unless your cost of funds go down. I mean, and because risk being low, question you can find it. The risk being low because these people, they don't default. They are very small loans. Number one. So as long as the interest rates are not very high, you keep a reasonable margin, and your administrative cost can be kept in check. Like for example, is the person on the field, the person who goes and collects money, etc. There is a name for that specific name given to him. So if he can, like for example, the way technology is adapted, in the sense he goes, collects money, gives the receipts, and or gives money on anytime anybody wants. So at one level you get cheap sources of finance. At another level you reduce the overall rates gradually, not to put your sustainability under threat. They should be profitable, but not excessively profitable. And that I think some part of the finance can be subsidized by government, because in the sense that if you want to have a empowerment and you want to uplift a rural society, then it has to be some cost. Some area need to be subsidized. I mean, like priority sector lending.
Yes.
Why should this be made part of a priority sector lending by banks? Okay, so there is you trade priority sector certificates, for example. So few banks which are not really able to do priority sector lending in their own books, they can we could create a pool wherein this could be part of that, and certificates can be issued against that pool, which can be traded among banks. So this is one way they'll be able to effectively pool money, because banks have a low cost of funds, the CASA cost of funds. They could be given at CASA plus some money, and certificates can be used to disburse that money from a microfinance institution perspective. That's one possibility. I know there are lots of ifs and buts, but if you truly want to bring down cost of money for them and you're interested in upliftment of that, because microfinance institution investor will not be very happy.
Yes.
Okay. They're saying we are replacing 60% money lender with a 40% MFI. We don't want that. We say 40% is still a stress to the rural economy. If we can organize funds in a way, look at large pool of funds. People are investing at 7% FDs, 8% FDs. Why can't that money saying somebody can take charge of saying we'll invest at 15% for all of you? The money can be huge. The only way you need to create a vehicle wherein that 7% seekers can apply here. And here I would say something like a fintech can come and say, okay, those who are looking at a fixed return will give you, and we underwrite, the provisioning part of it. Okay, any with the private equity, you can do multiple arrangements. I'm simply saying that microfinance institution from a 60% is come down to money lender to a 40%. From 40 maybe a 20 to be great relief, and if it come down to 15%, that will be the real upliftment of that society as a whole. That's I think would be the key.
Sir, actually, leverage credit card market is so popular in India, especially. So, how can policymaker can leverage credit card market be implemented in social insurance?
Social insurance. I think in India we don't really have a concept of social security as of now. So social insurance. I mean, you're saying is that credit card companies they share some part of the saying as so you take insurance companies on board, you take credit card companies on board.
Yes.
So some part of the money is spent by credit card companies and insurance companies.
That means default is insurance,
Which one?
which means the default on the
No,
credit
no,
card.
no. They're saying something else.
Okay.
Okay, what they're saying is that why don't you leverage? There's so many credit cards. Everybody's using credit card. Okay, credit card companies are earning so much of money, for example, out of that. Now, if credit card companies come on board along with the say insurance company, and they create, for example, either the card holder or maybe another group or a family, etc., to have an insurance in the sense of that in case of financial distress, they have an insurance to fall back upon.
Yes.
So, which is basically a credit card company will shell out money to for the insurance part to create social security for the credit card holder. Is that what you have in mind or something else?
Yes, sir. This is it.
First, most credit card, whether it's Visa, Mastercard, or RuPay or other, they are commercial entities. Now they are, unless probably they spend their CSR money onto saying what percentage, 2% of their money can really create a social security infrastructure. But my sense is why only credit card? If social security is to be created, I think a separate mechanism need to be worked because credit card is only again limited number of people. See, I know its credit card is large, maybe 20 crore card, for example. But for example, if you need to create this social security for say 50 crore people, then not only leveraging credit card, but also need to create an alternate mechanism that how a social security mechanism can be created. First is that whose perspective, who needs it, because
Because investors will not be happy with it.
not happy at all. In fact, I tell you, social security issue only comes up because in India we are seeing a decline of family as a family structure, as a social security structure. Because from a joint family to a nuclear family to a sub-nuclear family. Okay. Now we have demolished this social security completely, and there are no new security mechanism. Employees, government employee, private employee may have some part of their EPF, etc. But large part of the population doesn't really have that kind of social security. My sense is that credit card may be one option, but a difficult one. You need to create a mechanism wherein maybe some part of a small CSR funds or maybe a foundation which can be used to create social security for most families. Those who need it, maybe I think the bottom say 70% or bottom 60% people, those who are really in need of social security. But credit card surely can be used, for example, like medical insurance kind of things. But social security will require a much more sizable corpus vis-a-vis say medical insurance. So maybe I think credit card debts or fees can be leveraged to create medical stress medical insurance kind of a contingency fund for the people.
Dr. Rao, I was wondering, organizations like Paytm can perhaps become quickly small credit givers where they create your account as 1,000 rupees at credit, auto assigned, or you look at the parameters and so on. So a person can use that money. Now the question will come that if that 1,000 defaults, and if this organization doesn't honor him anymore, and also the others don't, because normally credit cards also do that, shake hands with each other, then he'll be really hard put to put that money in and then get it in going. To the extent that these transactions have come down to very small values, incomparable to the rest of the world. 1 rupee transaction people do, 50% transaction, which is 1/6, 1/8, whatever, or 1/80th actually, of a dollar. Right? And so they got used to it. Once they got used to it, for example, I don't pay by Paytm, right? And those Mazdoors standing over there laugh at me. And this guy does not have Paytm account. You all have it. What I think. And I'm told it is moving to the rural areas of the bottom line. Could that not become a mechanism of small credit, microcredit, financial institution, what you're talking about? Except that these should not be 36%.
So the problem comes is that 1,000 rupees or 2,000 rupees, where does money come from?
Where does this money come from? Is by giving some incentive, it's a marketing issue. By giving some incentive to the guy who deposits 1,000.
So question is that his money is at risk. If suppose, see, either he's a deposit giver or he's a loan giver.
See, I'm assuming that Paytm, like organizations, have developed a confidence in people. That's why millions of people are targeting. Right? Yes, my next door retailer also does business through this. You want to same old money order type. You want to send money to Tharagarh, some small village there. I'll find a way to get the money to him, right? And actual cash.
Right.
And he does it for a small fee, 1 rupee
That's
per
right.
100 or something.
Sir, but point is that putting money in the wallet of the person
Yeah.
would require that money has to either Paytm uses its own money,
Yeah.
or they borrow money, or
Whatever is profitable.
no, profitable in the sense because I don't have money. Question is like our operator doesn't have their own money. They're already on the running dry.
No, I'm not assuming that. Tomorrow somebody else can come up with the idea.
That's right. I agree. But the question still remains: who will fund in? Say 1,000 is one level, but say suppose 20 crore rupees or 50 crore rupees. Who is going to put that 50 crore rupees on the block? Maybe it will come back with the
See,
interest.
this goes back to AI. This goes back to digitization. This goes back to neobanks and all that. After all, they will have some new way of putting the old thing of credit and debit together. Somebody is borrowing, somebody is paying. And interest is paying. The technology has made these transactions cost effective. Very small price.
Right.
So I can figure out about the person. And more of it will be as we go in the future. So to the extent of being able to identify the person and the credit risk, my job is done. That is at a low cost. Hence, if I want to make good money, then I have to do this. I have to do lending business. Otherwise, I'm not going to make good
So
money.
social security is slightly different in the sense that,
Yeah.
that
I
for
get
example, so here is a question of putting your money and virtually you are, unless this money is created out of out of a pool. So to take care, everybody may not require immediately, but wherever it is required, I think you should be able to use that money.
Can
So
we
it's a-
connect it to something else? Your, I think, favorite used to be is the financial literacy. Because people say no financial literacy is there, that's why he's doing Paytm transactions. To me, it is not a financial literacy. He hardly knows anything about finances. He just has found a way of clicking it
Yes.
and let some money go out of the account.
Brought it down.
हाँ?
Financial literacy is a definite.
वो तो अपने वॉलेट से निकाला और आपने 10 रुपए का नोट दे दिया. This is the extent of literacy, isn't it? But otherwise, what do you think of the role of literacy? Say.
So financial literacy is much wider. In fact, with due respect to the gender, no aspersions meant. There was one study. In fact, my daughter was doing a project as part of her post PG, and this is in US. It's not about even in India. It said that post the demise of their spouses, husbands, a large number. I mean, I think it did not say most. It did not even specify the statistical significance level, etc. in the study, which is most women live in financial difficulty.
In India.
This is a study of US.
Okay.
Now, I would say this would be true even, for example, in India. It's
But
true of
research
that
should be
society.
done. Research should be done. Maybe
Yeah.
some of them are very happy.
Financial, no. See, besides, like you're teaching finance, somebody is, those professionals you can take out. I mean, a handful. Who are managing portfolio, who are earning and managing their own money, for example. Large part. See, women folk, for example, if you're looking at a certain number of families, because effectively, for example, I mean, coming from financial literacy point of view, they are never, because since you are not an earner, technically, you are never in control of the finances of the either household or individual or for the family. Nuclear family or a joint family. So you're never given a chance even to grow. So your literacy level, beside whatever you study as part of which is not financial literacy, which is just maybe literacy of the textbooks and you get you're a matriculate, etc. And today it has gone beyond in the sense that it is as simple as that. What Buffet and Munger says that if you earn 100 rupees, you spend 80 rupees, you invest 20 wisely. You may have born poor, but you will surely die rich.
Right.
Now, this does not really require, as I was explaining about IRR, you must earn more than the cost you're going to pay for it. The same thing. Question is that most housewives will have a housing budgets saying, okay, I need to, but they're earning how much husband earns. It's only what she has been told.
Is it same case in US as well? Like
This is actually a study of USA. India, I would say that it's probably same or even worse.
Yes, exactly.
Handful of financial literacies are coming to this particular point is beyond in the sense of you are being literate. Even graduates, for example, like mutual fund, we used to struggle. One question, repurchase price or when you want to buy a mutual fund at 15 rupees is cheaper vis-a-vis when you buy at 300 rupees NAV is expensive. Okay. Now that's an optical money illusion, part of even a lot of people saying cheap. NFO, for example. NFO is cheap. You're investing in NFO. Now, it's a common sense, common knowledge that 10 rupees NFO is getting you a basket of 10 rupees. A 300 rupees, already existing fund scheme has already an asset worth 300 rupees in that. So there's nothing cheap or nothing expensive. So, in the sense of, so unless the literacy goes to a level wherein we are able to understand, say, interest rates, understand about inflation, for example, how does it, value of money goes down, or how do you look at investments, how do you decide about, which are.
Dr. Zewar, my point was, at one point of time, now I would call it 25 years ago, 25 to 20 years ago, 15 years ago, government was saying a lot about creating funds for financial literacy. I think they put some percentage also on
That was investor education.
investment.
Yes.
Investor education. And they only put the CSR funds.
Yes.
Literacy, actually. I would.
So financial literacy is not investor education.
Sir, I am
Anyways.
No. Financial literacy.
Then.
When I'm saying investor education, in fact, this was also, and what is the latest regarding investor education? The money, for example, mutual funds are supposed to pay to the MP. And MP had, SEBI has entrusted MP to give the investor education using that fund which come from, and 2 BPSs is a sizable, money from your AUM point of view. The simple question is that if the asset management companies or the companies which are generating the money, which are in the front end of the customer, if they do not understand how the customer education functions, I think the trade body is far behind. So their understanding, they might think, with due respect to all this, they're doing a reasonable job. But my sense is that to say that a regulator or a trade body is in a better position to do investor education vis-a-vis the front end people. Of course, there are. I'm not denying saying you may be selling your own scheme with your products and in the name of investor education. But why trade body? Let it be done by independent institution. I would say give it to educational institution.
Some of that program failed.
Which I don't
Independent institutions taking it up.
know. Which I don't think it was given to anybody.
Okay, it was not given at all.
To my knowledge, it was not. My sense is that if it is to be effective, let it be done by third party. Absolutely no connection with the either trade body or the AMCs. Saying, and then you ask a report. Ask them the independent report. It is not about taking a picture. Say you hold a seminar and say 50 people attended and say you gave a presentation.
They used to be like that.
It is still like that. In what way is it different? I mean, I'm saying, for example, do you think in one session of half an hour or 1 hour, you can teach the nuts and bolts of financial literacy and the guy walks out and he become literate? So it is basically the same set of people coming over and over again. Even the learning, for example, unless it is regularly, I would say, brushed into the minds for even 3 months is not good enough for it to take shape. So from a financial literacy point of view, my sense is that an independent body should really make a curriculum clearly, identify the target group, and maybe do it on a pilot basis, and then extend it to technology at your is at your convenience. And if that experiment succeeds, then I think it can be rolled out, pan India.